Great stuff, David. Good afternoon, everybody. It is 12 o'clock. It's Friday, the 5th of June. The noonday gun has just gone off here in Cape Town. And so very warm welcome to all of you. Today, we're in day 71 of lockdown, alert level 3. And for most of us, it's back to work, especially in the real estate sector. But we still got strict rules, restrictions, and limitations. We think something weird is going on to how this coronavirus has been managed worldwide and how it's decimated many businesses in the short term and the global economy. World has been in shutdown and for more than 2 months and counting, and we've been challenged. So to everybody, first of all, welcome to Real Estate Investor Talk. It's our weekly thought leadership webinar brought to you by REI Mag in conjunction with Let's Talk Property. My name is Neil Peterson. I'm the founder and editor-in-chief of Real Estate Investor Mag and the REMAG digital platform. So REI Talk hosts these webinars every Friday at noon from 12 o'clock to 1 o'clock with the latest insights, good and bad news. Yes, there's always good and bad on everything for real estate investors, buyers, property practitioners, and property industry in South Africa and the globe. So we're here to give you both the good news and the bad news about the property world. But we're also here to give you some expert insights from our panel that you can apply in your business, your life, your property business, and your investments. And we welcome to you, our audience, and we look forward to your participation in today's webinar. So just to you, the audience, just for best audio and visual quality, just make sure switching off all other streaming videos or anything else that slows down your internet. And if you do log off for any reason on the webinar, you can just re-enter the webinar with the same link. Now, on the bottom right, there's a Q&A box. And so if you have any particular questions for the panelists that you would like to pose, please put it in there. And please direct it at the person that you would like to direct that question. And give us your name, company as well, just for some more information. Then there's a chat box, and the chat box is there really for any technical issues. We will also be putting links related to this webinar or anything to the discussions as well, or for any general queries or comments. We're also going to be sending out a poll with multiple choice questions, and they will pop up on your screen periodically, and we will ask you to vote during the webinar. So we would all like to have a crystal ball to see into the future and what it holds for us. And while there is a lot of uncertainty today, if you are worried, we are here to help you, to be a guide, to find a way forward to this pandemic. And nobody has all the answers. We don't have all the answers, but we seek to listen to experts in their game as we try and navigate our way forward for ourselves. Most important thing we have is our mindset. So today our webinar topic is what real estate investors and home buyers need to know about financing property. And I say Corona style because the rules have changed. So our expert panelists will be introducing themselves shortly, but just to set the scene, we know that you don't need to be independently wealthy to start investing in real estate. You can do it with very little finance. There are multiple ways. However, you do need to understand the choices available to get the necessary funding and financing that you need. There are multiple ways of financing real estate investment today more than before. And today we're going to hear what they are today with our panel of experts. So as a result of the coronavirus, it's created both challenges and opportunities in the South African property market for both investors and buyers, or whether it's residential, commercial property, and also challenges in terms of affordability of landlords and homeowners struggling to keep up with their bond payments and tenants struggling to pay rent. However, opportunities always abound. We got the lowest interest rates ever in over 50 years. So the cost of finance is massive. It's a huge discount as well, in addition to massively discounted properties that are going to come onto the market. And we know the low interest rate is likely to be somewhat dampened by greater uncertainties around employment, affordability, bank lending, but we need to work through these challenges, and that's what we're going to be discussing today. So investors getting started tend to have fewer financing choices available, but not always, as we will hear today. We know that as your portfolio grows, more finance options do open up, and the best property financing options depend on many factors, including the property, the investor, the conditional loan, and we're going to go into all of that now. So we speak to our expert panelists on the best available finance available for your specific property investment situation. So Without further ado, I'd like to introduce our panelists, and I'm going to ask each of them to introduce themselves individually, starting with Nondamiso.
Thank you, Neil, and thank you to the audience. I am Nondamiso Ngapai. I work for Absa Bank within Retail Bank, and I look after product within the home loan business. I work with an amazing group of individuals that are passionate about property and home ownership. And we're always quite excited to engage in conversations that enable us to understand what's happening out there and also understand customer needs so that we can design solutions that truly meet your needs. Thank you, Neil, for the invite.
Absolute pleasure. Mark, could you introduce yourself, please?
Thanks, Neil, and welcome to all the viewers. My name is Mark Levitt. I'm from Paragon Lending Solutions. Paragon specializes in all forms of commercial debt, with key focus in quick turnaround time finance for our clients. We've been around for 10 years now, and we're backed by one of the big four banks.
Great. Carl.
Thanks, Neil. Thanks, everyone. Yeah, so my name is I'm the CEO of Better Bond, and I'm in the fortunate position of working with a team of people who has, for the past 20 years, changed the lives of over 1 million people in South Africa. And we do that by making their dream of home ownership a reality and providing them with the best finance solutions we can find. And very, very proud to be part of that team.
Wonderful. Tim.
Hi, my name is Tim Akinisi, and I'm the CEO of a company called Mortgage Market that's here today. We're a fintech player, so we're an online marketplace for mortgages where consumers can make one application to the top 5 banks in the country, and we'll pay you back up to 25,000 Rand just for making the application on your own. So, we are looking forward to seeing individuals take more control over their application process as they become homeowners in the near future.
Wonderful. Christo.
Hi guys, hi to the panel, and Neil, thanks for the opportunity. I'm Christo Jonker from Brevance, the sales manager for the group. And yeah, we specialize in short-term property finance solutions, vary from sellers' proceeds, estate agents' commissions, development finance, etc. So yeah, we've got offices in Joburg, as well as Cape Town, and national footprint. So yeah, anything short-term property finance, for instance, bridging finance, that's what we do.
Wonderful. Sivan. Sivan.
Good afternoon, Neil and fellow panelists. Sorry, I was just unmuting myself there.
No problem.
Thanks for having me. My name is Sivan Govender. I'm the operations executive for Tough Limited. I think the best way to describe Tough is that we are a private residential commercial property finance business, mainly focusing on the inner city's affordable housing market. We also have a 17-year track record, and we have a national footprint as well in almost every major metropolitan city. Thanks.
Great, thanks, Sivan. And then, of course, we've got the lady in the house, Madeleine.
Good morning, everyone, and thank you so much for the opportunity today. My name is Madeleine Groenewald. I work for a company by the name of Housing Investment Partners. And Housing Investment Partners, in short, HIP, has been around for the last 11 years. And we have been, we were actually approached by government and Old Mutual, and they wanted us to come up with a home loan product that is specifically designed for the affordable market. And the product that we've actually designed is a product that is salary linked, and it actually protects you against the interest rate. So yes, I am very excited to be here today and explain to you exactly how that works.
Wonderful. And last but not least, Maya.
Thanks, Neil. I'm a property attorney for the last 33 years. And 2007, we saw the downturn in the market, and then we developed the concept of rent to buy. Rent to buy then developed further as we started assisting people with their first-time home buyer subsidies called FLISP. So we are looking to see that we have a best platform for finance for home buyers. We assist people with online pre-qualifications. We have rent to buy. We have government subsidy assistance, and we're looking all the opportunities to give you the right package for your property that you want to purchase. Thanks for being here today, that I can be here today.
Wonderful. Thank you, Mayor. Right, so let's just kick in right into the questions, and I'm going to start off with Nondamiso. from ABSA. And, you know, Nomisa, what relief has the banks? I mean, there's all these different type of packages that's happened. I mean, people have been struggling to pay their bonds, etc. So what relief has the bank provided to its customers? And I'm talking specifically in ABSA in this particular, with regards to the COVID-19 impact. You want to maybe just share a little bit about that?
Great, thank you, Neil. So as ABSA Bank, in fact, we spent quite a bit of time engaging regulators and working through the Banking Association of South Africa to really come up with a comprehensive program that would seek to assist customers out there during this challenging time that we find ourselves in. So we launched the program end of March, very comprehensive, right across from retail bank, business bank to corporate banking. And it's simple. If I think about the space that we're in, where I'm in retail bank within home loans, we said customers can defer their home loan payments for 3 months. And really the objective there being to being a short-term, you know, solution for our customers during the time that they found themselves in a challenging time. I think part of it is also about the fact that we're calling it a relief. And I think that's an important principle. Because during that 3 months where we are deferring payments, interest will continue to be charged, fees will continue to be charged, those will be capitalized. And at the end of that relief period, we are then able to engage the customer and determine the suitable term that would need to be applied in order for the customer to continue paying as before. We've actually even gone across, Neil, quite interesting, even in the insurance space, where we have looked at benefits for those that have credit protection plan, and we've looked at loss of income benefits. So as a full value bank, we've really applied our minds around delivering a solution that enables homeowners, be it property investors, you name it, to have short-term relief during this challenging time.
Right. Do you have an estimate of, I mean, how many, you know, what percentage of your customers have actually taken advantage of this opportunity? Do you have those numbers at hand?
So what I can tell you, Neil, is that we have a considerable amount of customers that have taken up the opportunity. We have engaged customers openly. You know, the information is available. We've gone across on the website. I can't give you the exact figures, but I can certainly tell you that our customers have taken up the relief and have really appreciated what the bank has done to alleviate the pressure that they find themselves in during this time.
Okay, great. So Mark, I think I'm going to go over to you. I mean, you know, as the banks are facing very strong economic headwinds, and we've just heard now on Nomisa saying that they obviously got this relief program, and the market has been severely depressed. I mean, that's why the banks are offering this. So what challenges do you foresee for property investors? And I mean, in particular to you guys, what role can non-bank lenders play in this regard?
Sure, so that's a good question, Neil. What we've seen, and this is from a commercial point of view, is that the banks are getting stricter and stricter in terms of their requirements, and access to funding is somewhat limited due to the limited capacity of the bank to take on new deals. Now, the focus seems to have switched from taking on new deals rather towards restructuring current clients and offering relief to current clients, which is a massive task for the banks. So turnaround times have decreased, have increased. So for someone who's found a deal and needs to move very quickly, it's very difficult to finance the deals through the traditional avenues at the banks. What hasn't changed is that there's still good deals in the market. So the role that the non-bank lender can play is that we're able to be a bit more nimble than the banks. You know, we are able to look at deals in tough times like this and to finance deals in the interim until the banks come on track and pick up these deals. So yeah, just being smaller than the banks and being able to be more agile and offer more innovative solutions in a quicker turnaround time I feel like non-bank lenders can certainly play a role in expediting new business.
Right, excellent. So Carl, I mean, given the current situation, you consider it a really good time to buy property now, given that's what's happening in the economy? I mean, are you seeing demand? I mean,
Neil, and I mean, it's a good question. And there's so much uncertainty at the moment in the market. And so, yeah, we're getting a lot of questions. And should I buy or should I not? If you look at the facts and if you look at all the criteria and things that are important when wanting to get into the property market, all of those indicators are quite good at the moment. We, as you mentioned earlier, the interest rates are the lowest that we've seen in 50 years at 7.25%. And that really makes the access to funding and the borrowing costs so much cheaper for customers to get into that. So I think that is one reason why I would say yes, it's a good idea. I mean, just to give you a practical example, if you were buying for R1 million, previously at about a 10% interest rate, the banks would have wanted at least about 30 to 33,000 Rand in gross salary. Now with a reduced interest rate, that gross amount that you need to qualify for a bond of that size now reduces by about 5,000 Rand. So it definitely gives us more scope for more people coming into the market. The third factor that is quite important is the transfer duty threshold that government recently moved up to R1 million. Mm-hmm. So again, it's cheaper and more accessible for people to buy. So there's definitely a lot of reasons why people should get into the market. My advice would always just be, if you have a stable income and if you can really afford this, then get into it. It is a good time. But just consider everything that is associated with buying a home, all the other costs, and make an informed decision when you do so.
Excellent, great. So how do you think has value in the home loans industry shifted in the past 5 years? Tim?
Sorry, I just needed to unmute myself. Yeah, so, when you look at this concept of value, right, in the last 5 years, you have to look at the whole value chain, right? So you look at all the players that are involved in it, right? So if I, as an individual, decide to make a decision to become a homeowner, that essentially triggers a number of other players that will make money as a result of my decision to become a homeowner. So let's start with the idea that an estate agent's going to get paid for it, okay? The second thing, a bond originator is going to get paid. They're going to take a commission. You'll have an attorney who's going to take a fee. You're going to have the banks who are going to step in and they'll charge you an initiation fee. And of course, the first 15 years of a bond is just paying back the interest without really getting into the capital. So you already have about 5, 6 players that have really benefited as a result of your decision as an individual to become a homeowner. And so the customer who this is all about, he's got to sit with this bond for a period of 20 to 25 years. And he hasn't even made his first repayment on his mortgage. And yet there's been so many other players in the value chain that have taken some money off the table as a result of his decision. So I think that the value over the last 10 years has shifted because right now we're in this world where the buzzword is about client centricity. It's about, putting the customer first. And yet if you look at an industry like real estate, for the customer to be the 6th person to benefit doesn't quite reflect an industry that's transforming and an industry that's shifting value to customers. And so I think that there's definitely an opportunity there for that value to shift back to the customers who have the responsibility to, to become a homeowner and to go through that journey over a 20 to 30 year period. So I definitely think that there has to be a different conversation about how value is transferred back to customers who are the reason why they started the journey in the first place.
So maybe just want to share a few ideas around those thoughts that you've just put on the table. What are the kind of things that we could do to bring that value back to the customer? I mean, what comes to mind?
Right. So I guess, let me use the example of what we've done as a business, right? So the reason why we exist as a business is to advance the mortgage origination agenda, right? So we understand that, marketplaces are probably the best way to get home loans or to get anything for that matter, right? Because you're able to compare things properly, you're able to make a transparent and controlled decision around that. So that's already value for a customer. And we are in a position where we bring an online platform where customers can control that entire experience. And then secondly, what we do is that we pay the customer back, an amount of up to 25,000. Now, this home loan journey is a very expensive one, and we all know that. So what we're able to do is to create the opportunity for customers to benefit first by getting cash straight back into their accounts simply by getting an approved bond from many of the top lenders in the country. So that in itself is value creation.
Excellent. Okay, Sivan, what are the challenges facing your clients and your clients' clients? I mean, you play in the sort of the affordable inner city investment sort of sector, which tends to be your niche. So, so what are the challenges as a result of this pandemic?
I think there's been some huge challenges. If you look at our clients' collections, it's been quite badly impacted. If you take what's happening in the affordable housing market, what we found is your collections are directly attributable to who your customer is. If you're exposed to the market that people are still getting salaries right now, so you're quite fine. So I think the biggest challenge is nobody knew and prepared themselves for it's unprecedented, so to speak. So selection of tenants and all of that stuff has become top of mind now, but previously wasn't so important for the affordable housing market. If you take deposits, for instance, we found that in many cases, the most sophisticated sort of borrower would have a prerequisite for a deposit. But in some cases, that the smaller entrepreneur coming into the space, they would then not really want to, they felt it was a barrier to get a tenant into their space if they took a deposit. So all these things are starting to play out. We understand now where, on average, collections have dropped across the board. That applies to Tough as well as our clients. What we've been doing during this lockdown is keeping very close to our clients to understand what their challenges are. So every client at Tough has been contacted by their portfolio manager to understand, especially around collections, because we understand if they're not collecting their money, they're not going to be able to service our bonds. So if you take the different sectors of clients that we focus on, we have the small emerging and the larger type clients. The larger guys with the better portfolios have been able to achieve around 65, 70 and above 70% collection. But that's directly related to the decisions of the past and how they selected tenants, deposits, type of tenants in their buildings and stuff like that. The other guys are sort of south of the 50%, which constrains their ability to be able to service our bonds. So I think from that point of view, it's had an impact on us. Pre-lockdown, Tough, our trend has been north of 95% on average, our collections. I can tell you the first month of lockdown, it was way below that. I think it was around the 70% and even lower the last month. So that affects our ability. What we're finding is that understanding who our clients are and who are their clients, or tenants down to that level, is becoming very important in the way we assess projects, especially post-COVID. I know we're not getting into that discussion right now. But I mean, the general trends, we're not seeing vacancies. So people are not moving out. So normal credit control policies are not being applied. So you can't evict people during this lockdown. But certainly affordability is an issue. People are holding on to cash because of the uncertainty. So those aspects, we're keeping close to our clients to understand what's going on. But it is a challenging environment, I can tell you that. All we've been focusing on the last couple of weeks and months has been on cash flow management and staying close to our clients.
I think that's probably the best thing that you could do, because, you know, I think the traditional approach in let's say in a normal market, if we can call it that, if there is a distressed client, I mean, you would probably tend to go the legal route, and I think probably it makes sense rather, as you say, to engage with your tenants.
Yeah, I think if you speak to our guys, and I've spoken to a lot of our guys over the last couple of weeks, as along with my staff that are contacting every client, it's my responsibility to do exactly the same. And the more we know, because like you said, I think you made a statement about crystal ball gazing. I mean, if we had a crystal ball, we'll be able to predict what's going to happen in the near future.
Sure.
Right now, there's a lot of uncertainty. And if you listen to the economists from week to week, I think events are changing and the predictions are changing.
Yeah.
But, you know, it's that exact point that you made. We got to understanding what's the challenges and being nimble enough. And I think that's the benefit of not working for a large organization. And I think Paragon or Mark said the same thing. We can react to the situation much quicker than than the larger type of more formal banking organizations. So,
right.
So that's the approach.
Wonderful. So Madeleine, at HIP, I mean, you seem to have a slightly different sort of financial approach compared to sort of conventional home loans and that kind of stuff. Can you want to maybe just explain how is this different?
Absolutely. Neil, you know what, when we were approached by government and Old Mutual to come up with a product that can assist the affordable housing market, we needed to understand what the challenges were when it comes to these criteria or these people.